We're going to sit down with this week's market analyst in a second, but first I want us to take a quick check of the latest cattle on feed report. This report, of course, is released monthly. Cattle and calves on feed for feedlots with a capacity of 1,000 or more head totaled 11.1 million on September 1st. That's up 6% from a year ago. Feedlot placements totaled just over 2 million head, 7% above last year's numbers. Other disappearance, which includes death, moving from feed to pasture, or shipments to other feedlots totaled 55,000. That's 12% above a year ago. Dr. Scott Brown, an ag economist with the University of Missouri Extension, will help us examine those numbers a little more. He's our market analyst this week. We'll get his thoughts on some other things too. Scott, thanks for being here with us.
You bet, Troy. Glad to be here.
All right, so let's start off by getting your take on the latest cattle on feed report. Any surprises for you?
Well, I think the surprise we really got out of last week's report was just the number of placements that we had there, setting at outside of pre-report estimates at over 107% of a year ago. Certainly suggests we got a lot more cattle being placed in August, and maybe more than anybody really thought going in, although once you start looking at that data a little more carefully, a lot of lightweight placements to me suggest that we moved some calves maybe earlier than normal just because of dry weather conditions in some part of cattle country.
Yeah, let's dive in a little more on those numbers. How does it compare with years past?
Yeah, so when you look at September 1 on feed numbers, 11,125,000 head of cattle on feed as of September 1. That is a record for September going back all the way to when this data series began back in 1996. So certainly looking at record numbers, and again, even that cattle on feed inventory coming in at the upper end of pre-report estimates, got a lot of cattle to deal with, and frankly maybe not surprising just given the growth that we've seen in beef cows over the last few years.
And moving on to dairy and producers, they've been having some trouble lately as far as that goes. Catch us up to date on some of the issues that they've been experiencing.
Yeah, when you look at the dairy industry in particular, we've certainly seen a lot of financial stress occurring in the industry in 2018. Lower than maybe we expected milk prices to be when we left 2017 has plagued the industry for much of this year. It's created a situation where we've probably seen some acceleration in the exit of dairy farms out of the United States. And really, I think we've continued to expect to see some changes in terms of slowdown in milk supplies, but it really hasn't happened, keeping us in a very tough financial situation.
Have you been getting lots of questions from dairy producers about maybe what they should do? Any advice on what you tell them?
Yeah, so certainly a lot of producers wondering whether now's the time to exit the business. Some of them, I think, who might have equity left at this point in time are going, is this the time for me to get out, or should I stay in? I guess I look right now and you look at the situation globally. We've got New Zealand that's seen milk supplies expand quite a bit here of late. We have adequate supplies of stocks both here in the United States as well as places like the European Union. And so the supply side is really full, and even here in the United States we continue to see expansion in milk supplies. We looked back at that July expansion being only 0.5%, and we might have thought we were starting to slow down milk supply growth, only to come back with the August numbers being 1.4% higher and another 5,000 dairy cows in the United States. So despite the financial situation, we're actually seeing expansion in places like Texas where we're adding more dairy cows. I just like to remind producers that the structure of the dairy industry is changing really quickly today, and you've got to figure out where your spot is in that industry with the rapid consolidation that seems to be unfolding.
All right, let's switch gears, talk about the hog market for a second. And Hurricane Florence caused Smithfield Foods to shut down slaughter operations for almost 2 weeks. And they're the largest pork producer in the U.S., so how big of a disruption was that to the market, and do you think things are getting back on track?
Yeah, so when I think you look at what happened, certainly the smaller slaughter runs that we saw as Smithfield was shut down for that period, I think that certainly helped boost hog prices. That and a combination of African swine fever discussion out of China and Europe helped as well. So I think it was positive. I think as we look forward, we now have hogs to deal with, and by and large that's going to be a Smithfield problem to continue to move those hogs that maybe weren't able to be slaughtered in a timely fashion. probably not that disruptive to the rest of the industry. And I guess as I look at the data that we have early in this week, it seems like we're getting back to much more traditional runs. And so things are getting back online in terms of what we'll see probably for this week in terms of slaughter.
Well, that's good news to hear that at least. Now, I don't know if you've heard, but trade has been in the news, lots of trade news. We're still working things out with Canada when it comes to NAFTA. Who knows what's going to happen with China? What do you think is going to go down with all the trade that's been going on?
Well, Troy, I often say, I'll tell you right after it all happens what did unfold on the trade side, but I guess you're going to make me speculate at this point. I will say that to me there's a lot of moving pieces to deal with. NAFTA is certainly one of them, where for pork markets in particular, I'll say Mexico is really important to that industry. So if we could get something with Mexico going, we'll see that as helpful. I think it still is a lot of effort to get something with the Canadians done at this point as well, just given some of the tough issues related to the dairy industry. China, to me, is really difficult to figure out at the end of the day. It seems like the longer we stay locked in this trade battle where we're both ramping up new tariffs on products, as the Chinese announced new tariffs on hides for us here in the United States, I worry about some of the effects on livestock markets as a result of what likely will be lower hide prices going forward. At the same time, when you think about something like African swine fever, if that is really devastating to the Chinese pork industry, where we produce and consume half the world's pork, at some point they may be looking for markets that will import pork into China, and I think we set well poised for that, even with tariffs in place. So to me, there's a lot of external factors that likely drive how quickly the Chinese might reduce tariffs on our products.
Dr. Scott Brown, University of Missouri Extension, always appreciate your insight. Great talking with you today.
You bet, Troy.